Europe Today is brought to you courtesy of Chase Buchanan, investment and pension specialists. Chase Buchanan, trusted advice made simple.
Hey, Steve.
Hey, good afternoon, Stephen. How are you?
I'm very well, thanks. And yourself?
Good, yeah, really good, thank you. Yeah.
Whereabouts are you at the moment?
So I'm based in Andalusia, very close to Malaga. So on the Costa del Sol.
Okay. Now, before anything else, Chase Buchanan, do you operate all over Spain? You've got an office in Javier, haven't you, on the Costa Blanca?
Yes, we have. Yeah, we've got an office in Javier. We've got an office in Marbella. We've actually got an office in Tenerife, and we've got coverage over in the Balearics as well. But that's not just the end of it. We expand. We've expanded into other countries in Europe as well. So we have an office in Malta, office in Cyprus. And also we've got American connections as well. So we've got an office in Canada and an office that deals with American people too.
So people basically listening anywhere can approach you for your services. It's chasebuchanan.com is the website, isn't it?
That's right, yeah.
Yeah, chasebuchanan.com, okay. Buchanan, if people are wondering.
Yes.
Chasebuchanan.com. Just before anything else, just give us a quick summary for people who, because, I'm not an economist at all.
Okay.
And so if I were requiring this sort of stuff, then I'd need to go to somebody like you for your services. In summary, in layman's terms, what is Chase Buchanan?
Okay. Well, we are financial advisors, independent financial advisors operating in Europe. So typically we will look after and manage people's manageable assets for tax efficiency in the country where they're going to be living. So that starts with a process. I mean, it's generally British people. However, we do deal with other nationalities. The connection for the British, obviously, is that we're a British company. So we will look at, typically a client will come to us, or a prospective client will come to us and say, I'm thinking of moving to Spain. So we will then discuss with them about their timeline, where they're looking to move, and when they're looking to move to Spain. And then ultimately we'll finish with getting them structured in the correct manner for Spanish tax efficiency. I mean, Spanish, as we're talking in Spain.
Sure, yeah. Let's concentrate on the Spanish side of things, I think. We're talking people with assets, say, from £50,000-ish, something like that, maybe?
Yeah, I guess. Yeah, I mean...
in other words, to save them money, if I went in and I had £1,000, you might say, we appreciate it, but it's not worth it for you. Because
it's probably not worth their while. I mean... The whole point of this is that we also have to help the client. So it's not just about, making profit for Chase Buchanan. It's about actually helping clients, because that's how you grow your business, by doing the right thing. So there's a certain level that is worth the client's while in sort of engaging us. So I would, you can't really put a monetary figure on that because things change. But generally speaking, I suppose somewhere in the region of 50,000 would be probably worth their while.
Okay, so people say, for example, wanting to move to Spain, then it's worth them checking it out, at least having a chat with you guys.
At least having a chat,
money, of course, yeah. So the residency requirements in Spain for people wanting to move there, I know that's not specifically your area, but you can help them with that. But just before we go to the financial side, what are the residency requirements? I guess there are different types.
Well, basically, there are two main types of visa. One is a golden visa, and the other one is a non-lucrative visa. These are the main two in Spain anyway. Now, the golden visa is you need to invest €500,000, so 500,000 euros in Spain. So that can be actually in a pension scheme, or it can be in some investment scheme, or generally people tend to buy properties with it. Now, it's actually 500,000 euros per person, believe it or not, although it's never been cross-examined for a couple to buy that and still achieve the residency. Now, we've seen cases where people have bought a property for, say, 800,000, and the lawyers have been able to construct the investment so that it's 500,000 in one person's name and then the 300,000 in the other. So they both, under matrimonial rights, qualify for residency. The other one is a non-lucrative visa. Now, the non-lucrative visa, you have to evidence that you're not going to be dependent upon Spain.
That's right.
You have to prove...
And you can't work, obviously. Yeah.
That's right. You can't work. Now, you can receive dividends from investments, and you can receive investment income and property rental income, that sort of thing. You need to justify. And it's around £28,000 for a single person and around euros. And it's about 34,000 euros for a married couple. So you prove that for the first year. You're also, with both, you need to have private medical insurance for the first year. And then it's then re-evidence for years 2 and 3. So you renew your non-lucrative visa after the second, on the first anniversary, so the second and third year. And then you have to obviously prove double that amount of money, income, or available capital to be able to do that. And then they retest it for years 4 and 5. Now, after year 5, speaking to some specialists in this area, we're not sure yet. We understand that you don't have to show then income evidence after year 5.
Right, because you could apply for like permanent resident status and
yes, that's right. It's renewed into permanent residency.
If you're Spanish
from there onwards,
yeah, that's right. And if your Spanish and culture is up to it, and you're so inclined, then eventually, after 10 years, you could apply to become a Spanish citizen, for example.
Yeah. Well, citizenship is a little bit different because citizenship, you're actually applying for a passport. And you need to do a language test. I mean, for many British people, it's quite a tricky. Yeah, and a multiple choice culture test, things like that. Yeah, exactly.
Now, just one more for today, and I look forward to chatting to you intermittently, from time to time on different areas. Okay. But just as we're on this sort of the thing, so this is anybody listening who might be on holiday in Spain or listening to Talk Radio Europe in the UK or indeed elsewhere at the moment. Clearly, these visa requirements don't apply to EU citizens, obviously, or EEA, European Economic Area.
That's right.
Right, but just concentrating on the Brits. What about the regional differences? Because just like in so many other issues, like health is a devolved issue, so your income tax and inheritance tax implications are not the same in Andalusia as they are in the Valencian community, the Balearics, Murcia, and so on.
Yeah, that's a massive area. Yeah, you're absolutely right. Well pointed out. It's a massive area.
So for example, not that it would necessarily be the main thing. Somebody says, I think we'll up sticks and we'll go and live in Spain. Where we go to live might be guided by how expensive or how many discounts we can get on our tax. Many people might just go for where they want.
Possible.
But what are the differences?
It is possible to actually move to a specific region for tax reasons, I suppose. But, I mean, all right, you can tell with my accent now, I'm a northerner. So my phrase is don't let the tax tail wag the dog. So you live where you want to live and you structure yourself in the correct manner for that place. However, there are some really intense differences between some of the autonomous regions. And that comes into play with both income tax and succession tax and also wealth tax in Spain. So to break it down a little bit more, there are 19 autonomous regions in Spain. So, well, actually, 17 regions and two cities.
The 2 cities,
Yeah, there's 19. Yeah, so what they do is they set the tax rates centrally, central government in Madrid, and they send those out to the autonomous regions, and they make their changes as they feel appropriate. So they may need to enhance votes for the next term of office, or they may need to raise capital. So they'll make changes accordingly. So you can imagine it from a British person's point of view. Imagine all the counties, Lancashire, Yorkshire, Sussex, Essex, all having different tax implications. I mean, it's quite a plan that you need to make.
So let's say, starting, say, with income tax. So if somebody does go to Spain and they're resident in Spain, okay, let's establish that they've acquired residency. And so their income tax, if they're working, as so many people are these days, say virtually, they might work for a bank in London, but they happen to be at a computer in Spain. You're taxed in Spain if you're a resident on your global income, wherever the money comes from? Yeah.
So if you're resident, I mean, going back to residency, if you live in Spain for more than 183 days per calendar year, and do bear in mind that the tax year is the calendar year, so it starts on January 1 and it finishes on the 31st of December. So it's not like we understand as British people, 6th of April to the 5th of April. So it starts at that point. Now, if you are living in Spain for more than 183 days, then by de facto you are Spanish tax resident and liable for tax on your worldwide income and your worldwide gains. Now, if you remember me saying earlier about the timeline is really important, if you move to Spain at the wrong time of the year and you don't restructure things into the correct manner for when you're in Spain, then you could have some remnants of tax that are actually payable in Spain back from January 1st. I'll give you an example. So if somebody moved in, say, April, and they've got ISAs, for example. Now, ISAs, the small print within ISAs say that they are only for UK residents. So they're fully taxable in Spain. So somebody comes to move to Spain in April, and then in May they say, you know what, really love it here, we're going to stay. And they apply for residency, and they've stayed 183 days, and then they cash their ISAs in. And let's say they've made £10,000 worth of profit. Well, that profit is payable, or the tax on that profit is payable in Spain. And the same with a lump sum from a pension scheme. So a lot of personal pension schemes from the UK are, the first 25% is tax-free. They call it now pension commencement lump sum. Now, that is fully taxable in Spain as income tax.
So, just because I'm a bit slow on these things, so all other things being equal, if it doesn't make any difference to you, would it be better to move to Spain in January or December, to take the two extremes?
The two extremes in the latter end of the year, but you need to know about it around August, I suppose. You can plan, just don't spend 183 days in the country.
Yeah.
If you want to structure things right we're not talking about tax avoidance, we're talking about structuring things for Spanish efficiency.
Yeah.
So it's fully declarable in Spain, it's fully reportable in Spain, and the tax is payable in Spain.
Before we move on, staying on income tax,
yeah,
I couldn't even tell you. I should know because I have to pay it in Spain. But
yeah, tell me.
I think I seem to remember from my invoices and things, it's 21% retención. It's like PAYE in my case. So I don't even get to see it. But is that whatever the income tax is in Spain? Is it the same, or does it vary by region?
No, it varies. It varies by region, first of all. So, it varies by bandings, if you will. So some autonomous regions have more bandings, if you will, the escalating rate. Mm-hmm. So you earn over a certain amount and you pay a little bit more. Some autonomous regions only have 4 bandings. Some have 7 bandings. Now, One of the most expensive regions, actually, I believe, is Catalonia. And Andalusia is up there as well. In terms of the highest rate of income tax, it's like 48%. So it's quite expensive. The first basic rate of income tax is 19% for this year, and it increases accordingly. Now, there are 2 different types of income taxes. General income tax, which is tax on pensions, tax on working income if you're autonomous or that kind of thing. And then there's savings income tax, which is effectively capital gains tax. Now, savings income tax is payable on returns from investments, say, for example. And that's the only tax, actually, that there isn't any autonomous regional differences. So for the first 6,000, it's only at 19%, and then it's 21% for the next 44,000, taking you up to 50. There's another banding of 23%, which takes you up to 200,000 euros of profit, bear in mind, or savings income tax. And then over 200,000 is 26%, which is the new rate which they implemented, I think it was last year. Mm-hmm. So it's quite a new rate. Prior to that, the highest rate of income tax, savings income tax you would pay will be 23%.
Andalusia, I understand the wealth tax, there's been a change recently, hasn't there?
Yeah, you're right. So Andalusia looked at this and they said,
Can I just interrupt
sure.
you? Because as an establisher, I'm completely ignorant of these things.
Yeah.
When we talk about wealth tax, are we talking about, say, for example, you've got, to keep it simple, you've got, well, it could be shares, but you've got money in the bank. I know interest rates are on the floor. Okay, they're going up now.
Yeah.
But the profit that you make on your money, suppose you've got, for argument's sake, £1 million in the bank, and that makes profit. In other words, interest rate is paid. Is that a wealth tax? In other words, the tax on the profit that you've made? No? Okay.
No, it's worse than that. Wealth tax is literally a tax on your wealth. Now, in most regions, there is one region that's different, that's got a lower allowance, but most regions, every person is allowed 700,000 euros before they pay wealth tax. Mm-hmm. So for a married couple, it's each. So for a married couple, it's 1.4 million. if you're resident in Spain, so that could be Spanish assets. So if you've got a Spanish asset,
so for example, your house,
5 million, yeah.
So for example, your house is worth £700,000. That counts euros. That counts as wealth.
Yeah, it counts as one. So for a married couple, it's 1.4 million euros. Or for a single person, it's 700,000 euros of Spanish assets. Now, what you also have, if you're resident in Spain, you have a further 300,000 euros allowance, if you will, for property, for your principal private residence. So making a total of potentially 2 million euros. So 600,000 for a married couple on a property and 1.4 million euros in other assets.
Right.
So
that's quite an allowance for most of our listeners. I would think are not in. Some will be, but in 2 million euro houses or whatever. So.
Well,
I should be surprised actually. Yes, La Fagaleta.
Yeah, things mount up. But it's like the UK keeping inheritance tax at £325,000. All of a sudden, more people have come into that bracket. You know.
Yeah. Gotcha.
So. But basically, wealth tax, so if you have over 2 million euros for a married couple and that breakdown of 600,000 of property and 1.4 million in other assets, anything over and above that, they apply a tax and it starts relatively cheap, but then it increases quite significantly as you get higher, as you have more assets. Now, there are ways of reducing wealth tax. And in Andalusia, the Andalusian government decided, you know what, we're not actually making that much money from wealth tax. I think it was something like, don't pin me on the figure, but I think it was something like 0.4% of the revenue they generated was from wealth tax.
Right.
So the Andalusian government had a decision to make, and they decided, look, let's just get rid of that, which might then encourage wealthier people to move to Andalusia, which seemed like a great idea. Now, central government in Madrid, whether they were aware of this decision, but a week later, they're bringing out, or they're proposing, a new tax. We're not sure of the final details of it. It's basically an asset tax. I think that's what we're calling it, actually, which will not be kicking in until about 3 million euros per person. So it's the very wealthy that they're aiming at. Yeah. And that's going to be taxed centrally, so that's not going to be autonomous, regionalist, specific. It's going to be taxed centrally.
Yeah.
Okay. It's quite significant.
It certainly is. I tell you what, we'll leave it there and we'll catch up next time and we'll move on because there are various things. There's a lot to take in there, which is why obviously anybody in a situation, as we've said, people with sort of like 50,000 plus, with no upper limit, obviously. Marin, her mum used to say, "No risk, no fun," and so there's no risk. Of course, people give you a call for that initial consultation and see if you're for them, basically.
Exactly. Yeah, I think it has to be a two-way thing. We have to have that conversation, and the conversation doesn't cost anything but the cost of a phone call,
exactly,
or an inquiry on the website. It's worth having the conversation and just to see if there are things that we can do to help.
That's right. Not even that,
because point them in the right direction.
Most people are on a flat rate these days, so not even that. Yeah.
Exactly. Yeah.
All right, Steve. Well, great to catch up with you, and thanks for this initial thing. We'll cover some other bases next time we speak. Take care.
Indeed. And you too. Thanks for your time. Thank you. Cheerio.
Europe Today is brought to you courtesy of Chase Buchanan, investment and pension specialists. Chase Buchanan, trusted advice made simple.